Boy, that time flies when you're having fun. It's about that time of day again here, folks. Back in the action once again. Hope you had a fantastic session out there. But it's about time to get back to work, though. Thursday evening, March the 12th, 2020. My name is Joseph, as always. And welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best levels of support and resistance for tomorrow, the best entry setups and targets for tomorrow, and most importantly, my job tonight is to help us keep out of trouble tomorrow by identifying, avoiding all those big traps waiting for tomorrow. That's Friday's trading session. And I got a jam-packed video in store for you guys and gals tonight. The charts are ready in the background. Got some gold, some S&P, and of course some crude oil. Got a lot to talk about tonight. We got some ranges, got some channels, maybe some triangles, and a couple flags hidden inside there. We're going to break all the charts down to find the best setups for tomorrow. Speaking of tomorrow, I've also got the calendar all prepped up. We got some rollover we're watching, some big news tomorrow, and of course, right, tracking this coronavirus expansion as we go into the last day of the week tomorrow. Before we jump in, though, and put the charts together and check the calendar for tomorrow, don't forget, if you're here for the first time, make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish every week on this channel. So subscribe. Hit that bell icon so you always get notified every time I publish something new. If you have any questions for me tonight, drop those questions in the comment section below. I'll be checking those after I publish the video this afternoon. And as always, if you tune in every evening to watch this video newsletter, hit that thumbs up button for me. Always appreciate you guys and gals tuning in every evening on this video. Now, speaking of video, let's not waste any more time. Let's get this party rolling tonight. I'm going to kick off tonight's video tonight with the economic news calendar for tomorrow. Let's grab a look at the news calendar for tomorrow, courtesy of Econo Day. And let's see what's on the schedule tomorrow before we go jumping into the charts for tomorrow. Now, of course, tomorrow is the end of the week. Anytime I have a Friday trading session, I know early in, early out is going to be on my radar tomorrow. Now, we usually trade every morning from 8 o'clock all the way through to about 11:30 Eastern time, Monday through Friday. On a Friday morning, though, you got to really have a good reason to be trading after 11 o'clock Eastern time on a Friday morning. Tomorrow, right, this is one of those Fridays where the market's been crazy all week. I'm sure you're like me right now, kind of emotionally exhausted, right, from how all the drama that's been unfolding this week, right, between, everything involved, right? So tomorrow, I wouldn't be surprised if we start seeing some price action really slow down, 10:30, 10:45 a.m. Eastern time. So tomorrow's one of those days where I know I'm probably not going to be trading after 11 o'clock tomorrow morning, definitely not in the afternoon on a Friday afternoon, but I'm really going to be kind of taking the temperature of the market tomorrow as of about 10:30. So tomorrow morning, 10:30 a.m., right, we'll stick the old thermometer in the mouth of the price action. We're just going to see how the personality feels tomorrow. What usually happens on a Friday morning is we usually see some great volatility from 9:30 to 9:45, and usually by 10:30, 10:45, 11 o'clock, a lot of the pros have already gotten in and gotten out, and things start to kind of sputter out as we go into that 11 o'clock hour. So early in, early out tomorrow. Tomorrow morning, though, 10:30, start taking the pulse, right, of that price action. Start taking the temperature of that price action. If it's slow, if it's sluggish, we really got to be careful as we go into the end of this week. So early in, early out, set your alarm clock early tomorrow. That way you're not getting to the markets too late tomorrow morning. That's going to be the big thing for tomorrow. And then, of course, obviously here, we've got not a lot of major news tomorrow. It would take a pretty colossal news event right now to be considered the major, impactor on the markets tomorrow. We got import exports, we got consumer sentiment. The reality is all these numbers are lagging, right? That consumer number will be for last month. So you're probably not going to see a lot of traders who will be paying attention to those numbers tomorrow. It's pretty obvious. You probably don't need me to tell you right now, right? But how the world continues to absorb new information about this virus. Will we hear any reactions from OPEC? Remember, just a week ago, OPEC had a 2-day meeting and they couldn't decide on a production cut. They flood the market with liquidity on Monday this week. So we'll see if OPEC, comes out with anything tomorrow. That's really what everyone's kind of waiting on right now, right? I mean, last night we saw, of course, the big bloodbath, courtesy of the travel ban, right, from Europe to the U.S. That's obviously what was the catalyst of that move down today. I wonder, will we see any more big catalysts overnight again? Everyone's listening in, watching closely right now. And, I'll say the same thing tonight as I've said repeatedly all week here. I realize the headlines are very scary right now. I realize that kind of emotionally, it's easy to get wrapped up in this right now. The news media is really sensationalizing everything. It's difficult to tell what the reality is out there. My job as a trader tomorrow is to ignore all of those distractions and just focus on trading my strategy, right? Finding my day type, finding my levels, and finding my entry signals. That's my job tomorrow morning and every morning, really. So my kind of pep talk to you, we'll do this obviously tomorrow in the trade room like we always do. Keep in mind, we'll be in our trade room tomorrow every morning, 8 o'clock Eastern time on the dot, and we'll trade this stuff together. But tomorrow morning, I will tell all my clients the same thing I'm telling you right now, and that is forget about what the headlines are saying right now. Forget about what the little voice in your head is saying right now. Let's go out and let's define our setups. Let's trade with confidence, and we'll worry about the rest of the world right after we're done, right, making our money tomorrow. That will be that's my plan, right, for tomorrow. Get there early, stay focused, stay sober, right? Don't get drunk on all these headlines right now. Execute the plan. And don't forget tomorrow, every morning, right? 8 o'clock Eastern time, you can find all the registration information to come trade with me every morning as a client. I'll put all those links for you below the video tonight if you're on the blog, in the description of the YouTube video if you're here watching me tonight on YouTube. Also, want to make sure you're aware too that for tomorrow we are watching rollover on the E-mini S&P. We talked about rollover last night. We didn't get it today. Once the 0620 contract exceeds the 0320 contract, that's 06 again, Joe, 0320 contract. Once we have more volume on the 06 on all the E-minis, we'll trade the 06. As I'm coming here tonight, 5:45 Eastern time, I can see right now there is almost triple, if not quadruple, right, the volume right now on that 0320 contract right now. So the 0320 is 4.25 million. The S&P 620 is 1.4. Once that 620 contract exceeds the 320 contract, we'll go trade that 620 contract. You don't need to overcomplicate this, right? Rollover is not that difficult. Once the volume rolls over, we will roll over as well. So be aware of that for tomorrow. I'm prepping for rollover tomorrow, but we won't know it until we get there tomorrow morning. So again, we'll do all of this together tomorrow morning. And don't forget, as I mentioned in last night's newsletter, there'll be no newsletters for me next week. Next week is quadruple witching. I'll be spending that time on some really exciting new material I'm working on for my clients. So no newsletter next week. Watch the rollover stuff tomorrow on the E-minis. Get to it early, get out of there early, and again, sober tomorrow, right? Don't be getting drunk in all the headlines. Focus on executing the plan correctly. And if you don't have a plan, make sure you come out and trade it with me tomorrow. I'll give you all the cheat sheets, all the spreadsheets, and we'll walk right through all the setups together. Now, speaking of setups, I do appreciate the patience on that introduction. There's a lot to talk about right now. Like I said earlier, right? My job is to focus on these setups here for tomorrow. I got some oil, some S&P, and of course some gold here all prepped up for us tonight. Where should we begin tonight? How about some crude oil? How about some black gold, right? Some Texas tea. So what do we know about the oil market here tonight? Well, first of all, we certainly know the market is bearish, right? You can definitely see that strong shot lower. Every time the market pokes its head above the moving average, it seems to be getting swatted back down. So we definitely can see this market is bearish. A bear market tells me I want to sell at levels of resistance. What else do we know on this chart? We can also see that range right in the middle. Now, there's a lot of these little ranges that are kind of poking their heads out here right now. You'll see this is the easy one. This is the easy one on the charts tonight. You'll see more of these ranges and how sneaky they are for tomorrow. That's going to be one of the biggest challenges for tomorrow's trading session. We'll talk about that as we go here tonight. Not to worry on that. What does a range tell me to do? A range tells me to use the size of the range to find resistance overhead, the size of the range, right, to find support levels below. We know we're bearish, right? So a range bound market tells me what? It tells me to sell high. It tells me to buy low. Avoid the middle. Range bound markets are balanced markets. Buy low, sell high, use the range as the magnet, right? Buy low, sell high, and focus on failure setups. What else do we know here right now? We also know, courtesy of that trading range, the amount of the move underneath the range is the amount of the move above the range. That creates a really nice level of resistance here overhead. Anytime I have a trading range, I like to mark up my higher highs, I like to mark up my lower lows, and that creates what a lot of people would call an expanding triangle. Right? Now, the goal is to use the top of that triangle as resistance, and since we're bearish, right, use the bottom of that triangle for your targets. So we know we're bearish, we got a range, got some triangles going on here, we got lots of resistance for us to use here. So let's plan our entries here for tomorrow. The goal here is every time the market pokes its head higher here, right, it keeps getting swatted back down. So if the market gives me some relief off these lows, if we can get up around this trend line up here, if we can get up around the trend line, I'd love to be a seller right up around that trend line. Now, you'll notice I've got two kind of sell zones. I got one zone right there and one zone right there. That will greatly determine what type of entry pattern I'm going to use on this. So, for example, if we see a relatively shallow pullback up inside that first zone, a lot of times what happens is the moving average comes over, the buyers will try to buy the pullback, and we can just simply sell right into those stop losses with what I call a buyer failure pattern. Now, you'll notice we saw a couple of examples back here. We went up, the buyers tried to buy it, they failed and came back down. That's a good looking setup, but it's not in a very good location. What I really want is, like we saw over here, goes up, pulls back, and I can sell it before we go back down into that range, Remember that we don't want to be trading inside the range here. So if I can get a relatively shallow pullback up, get that moving average coming over, buyers come in, try to buy off of it. I know exactly where their stops are. We know we're bearish. I want to be a seller, right? I'm looking for resistance. I want to sell off resistance. And we know we have a range which will act as a magnet. Now, of course, targets in this case will be back down at the side of the range. And, of course, leave a runner down to that major low, right? That's one scenario I'm watching for as we go higher. Another scenario I'm watching for, if we really punch, right? We get that pendulum swing. We really dig into that secondary battle zone, as I call it. What I'll now have to do is I won't be able to be so aggressive any longer if we really poke higher here. If we really poke higher now I've got to worry those buyers. They're probably not going to give up without a fight. They're probably going to try once, they'll try twice, and then I can look for that short off the high from there. I call that a failure pattern, but it's a little bit more conservative, right? Because, again, in this case, we're still bearish, but that short-term momentum will oftentimes give you another leg. And so you want to give those buyers, right, a couple swings at this. Once they try once and twice, now my order can be slipped right below those lows. Again, we're selling at resistance, right? We're selling above the range, and we're using the range, right, as our magnet. Target, of course, now at the other side of the range, final target, right, all the way back down at that prior low. Now, another scenario here would be, so what if they do hold that pullback? Right? What if we do get that jump up? What if instead of these buyers failing, what if they hold the pullback and make a run? This is what I call a 1, 2, 3 reversal, right? So 1, 2, 3 reversal. You'll notice didn't happen there. Those look pretty convincing, right? So remember, you can't just buy breakouts, not in liquid markets like oil futures, right? Maybe in some of the CFDs, right? Some of the cryptos, right? Penny stocks, sure. But breakouts are not a very reliable trade in real liquid markets like these. So once we see a 1, 2, 3 breakout, I'm going to mark up that high. I'm going to mark up that major low and find that hidden channel. Look to buy the low of that hidden channel. I call that a 1, 2, 3 reversal, or in this case, it'd be a 1, 2, 3 breakout as well into a hidden channel pullback. Now, I'll also tell you too, who knows what could happen overnight? Let's say the market gets spooked. Let's say it really rips higher. If it really races higher here, don't chase after it. What I'll do is I'm going to wait for the pullback to the moving average, right? One of my favorite setups, I call a 2-try trap. Imagine now we jump, right, in the overnight here. We have a shallow pullback and a higher high. Now, usually this will just barely miss the moving average. It may just come back and kiss it, right? It's usually a very shallow pullback. Once I see that shallow pullback, now I know exactly where buyers are waiting and looking for, again, what I call a two-try trap pattern. Now, make sure you look how this is structured. Strong move up, higher high after that shallow pullback, then hit it, right? Grab that trap low and hit it back up to retest those highs. Those are two easy reversal patterns I'm waiting for right now, right? And of course, you know, my buyer failure, my nested failure, right, to sell off of those highs. Now, don't forget, guys, we're going to be trading this stuff together tomorrow morning in our trade room. If you're not with me tomorrow in the trade room, not to worry. Make sure you grab that free course. I'll put a link in the upper right-hand corner for you right now. Grab that free trading course because that's going to show you my 4 favorite entry setups, right? Just like 1, 2, 3 breakouts, traps, failures. You'll learn all about my favorite setups. Grab that link in the upper right-hand corner. Grab the free course, right? You'll love how we go over lots of examples of how each pattern sets up, right? The free course link popped up there. Pause the video, grab that free course. You will love that. That way, at least, if you're not with me tomorrow in the trade room, at least you'll be able to follow along with me every evening on this video newsletter. And again, don't forget, I'll put all the links I'm talking about tonight right below us in the description of this video. Now, obviously, if we go sideways here, I don't want to do much in the middle here. Right? We don't want to do anything in the middle. I want to wait for it to go up, buyer failure, right, and back down. What if we go lower? As we go lower here, what are my options as we go lower? One option would be if I can see a real strong shot lower, right? I've got this measured move I've got down here at 29.43. If I can get a real strong shot lower, I can look for that same two-try trap pattern. But I'm going to warn you, though, this has to really be strong, right? This has to be a really strong move. You've got to have enough momentum going lower that you're able to convince enough sellers, right? So you really got to see a strong punch, right, as we go lower. And again, I want to sell a trap high before we get down to that measured move. Now, what is probably a lot more realistic here would be if we get a 1, 2, 3 breakdown that blows out everything, right? Then I can mark up that low. I can mark up that high. Again, not drawn to scale here right now. I probably should put this like this, right? So imagine now we go move down, right? We pull back and we get that jump right through it. At that point now, it's on. They're making a run down to that 27.90. There's your 1, 2, 3 breakout now. Again, clearing through lows, clearing through measured move, mark that low, mark that high, and I'm going to try to hit that high, right? We call that a 1, 2, 3 breakout into a hidden channel pullback. Those are two setups I'm watching for as we go lower. We may also make a run lower and go sideways down here, right? If we spend a few hours down here, and it will take a couple hours to convince, right, to kind of confirm that range. But if we go and we sit and we sit and we sit, what do we do in a bear market into a range? We sell above the high. My favorite way to do it is that buyer failure pattern. Wait for those buyers to get caught buying that breakout, right? Wait for those buyers to get caught buying that breakout, and we'll sell right into those stop losses, right? That's if the market goes sideways there. Can I buy it off the low? You can buy it off the low, but you really got to be careful. You've got to use that crown reversal like we always talk about, right? Crown reversals are really the only kind of pattern I would trust, especially in this bloodbath of a market right now. And again, what this will do is this, as you pull back here, you'll have bears trying once, bears trying twice. The moving average will come right down, usually just like that. Nice strong, right, green signal candle, and whoop, right back up into that trading range. And again, pay attention to how I draw this, right? These are higher highs. This is a lower low. What you're doing is you're getting the bears to kind of dig their own grave, right? Trying to sell into that measured move here, right? And again, notice this is not a two-try trap. A two-try trap has a lower low in price. That's what makes it a two-try trap. This one has a higher low in price. Right? If I back this out, right? That higher low in price, that's the big difference between the reversal and and the continuation. And again, like I mentioned earlier, you'll learn a lot more about these patterns in that free course I mentioned linked up in the upper right-hand corner. So buying off the low would be the only real option here, would be that crown reversal pattern, right, to get long off of that low. So that's what I'm thinking here for tomorrow. We know we've got a pretty good chance here. We'll use this range, sell high, buy low, right? What I do want to do is stay out of the middle, right? Buy low, sell high, and of course the bear bias here, I want to be a seller. Don't forget, get registered for tomorrow morning's trade room. Use the links in the description of this YouTube video, and I will plan on seeing you there, right, tomorrow morning at 8 o'clock Eastern time. Let's keep going here. From the crude oil, how about some S&P here tonight? Let's grab some E-mini here as well. What do we know about the E-mini S&P here tonight? Well, first of all, we got rollover coming at you, right? So rollover probably going to be the case here, right, for tomorrow. We'll keep an eye on that volume count for the 620 contract, as I mentioned earlier. What do we know about, what else do we know about the S&P right now? We know we're very bearish, that is for sure. There is no doubt about that. Big, strong moves down. The buyers had a chance here, but you see what happened, right? They punch higher, the buyers try once, the buyers try twice, and it collapses back down. Beautiful example of when you'd want to use a nested failure pattern when you get those big spikes, right, as they go higher. Because you know that big spike like that, good chance it'll give you one more leg before coming back down again. Big spike up, one try, two try, and then of course you're selling, with a target back down to retest that low. So we know we're bearish. Every time it goes up right now, it's being sold back down again. What else do we know here right now? We can also see, of course, I think there's a range in here. I think this range is probably going to be the biggest challenge that we have right now on this market for tomorrow. Because in all reality, if we pull back right now, right, we're going to go right into that trading range. This trading range is really going to be, as you can see, it's kind of the same thing as crude oil, right? Crude has that range right in the middle. So does the S&P here. It's kind of a sleeper. You know, this is a range I'm sure a lot of people are not going to see. What does that range tell me? It tells me that that's a magnet, and it will likely draw that market right back up into that 25-40 area, right? That also tells me if we get back into that range and go up, I can sell it back down into that trading range. That range is probably going to be our biggest challenge here for tomorrow. What else do we see here? We can see a couple different channels, and these channels are pretty interesting because I got this low, right? That low to that high, right? That of course creates a hidden channel. And then, of course, we have this one off these lows up to that high, right? Now, in my opinion, the most important channel is this most recent one here, right? Because, you know, normally I'd be looking to sell off the top of this channel here, right? Normally I'd be looking to sell off that top. But as you can see, though, trying to be a seller off that top, it's not going to be that easy. Not in these conditions right now. I think if we can get a little bit further down the line here, then I think that sell starts to look a whole lot better. Like I said, I think that range in the middle is really going to fool a lot of people on this. What else do we know? We get a trend line in here, right? That trend line appears to be a juicy level for sellers up here. But again, that range really spoils the fun. You know, I wish the range wasn't there. If the range wasn't there right now, I would say let's draw that channel off the lows. Let's get that trend line coming over, right? Let's get up above the moving average, get those buyers trying to buy, and let's just sell right into those stop losses. That's what I would say right now if we didn't have that trading range. With that trading range though right now, this really becomes a much more challenging scenario here. Now, we know that the buyers want to go back into the range. The bears, of course, want to get down to that measured move waiting here, right, as we go. I have that next big level at 27 down to 23.30, this block down here. This is off a weekly chart. You got to go all the way back to a weekly chart, right, to find that area here. So we definitely know there's a lot of support down here. In fact, if you were looking at a weekly chart right now, it almost looks like we were destined to go right here to this 24, 27. This is back in 2018, late 2018, early 2019, right, since the last time we've been at these levels here. So we know we got a bunch of support levels below us. We know we've got that measured move below us as well. I've marked up that measured move here, 1 and 2. You know, the hardest part right now is just, again, if we get the pullback, I don't know if I can trust this pullback right now. So my gut tells me here, right, buy this thing back up to the range. But obviously, right, I'd be crazy right now to try to buy this market for obvious reasons. So we know the range is above us. What if we get the pullback right now? If we get a pullback right now, I've got to treat that range with respect, right? That range will definitely be the magnet on that pullback. So, we may see a two-try trap here, right? This may end up becoming a two-try trap pattern. There's a possibility here, right? That may be a two-try trap. So if you want to take a bit of a gamble here, that would be a very aggressive place to be a seller, just because you've got those weekly lows, right? That weekly chart support down there at 24, right? 24, 27. And it does look like, right? Line those up. It looks like you're right about support, the low of that channel here as well. So it's definitely going to be an aggressive two-try, right? A two-try trap off of that low. Be careful on that one. That's definitely something I would trade very carefully if you choose to trade it. What I'd rather do is wait for that pullback. Now, this is where I think we can grab a quick scalp on the way up with a shallow pullback, a higher high, and a trap low before we get back to that range. I think this should be a pretty easy trade, to be honest with you. We have to, first of all, though, get that move, right? We got to get this market running higher. What's going to happen is people are going to see this channel. They're going to see this channel. They're going to try to sell it, right? They'll try to sell it. It'll keep going, try to sell it, right? And hopefully we'll get that trap. And that should be a pretty good, looking at the way it sits right now, if we can just simply anticipate that range is going to be the magnet, if I can get that run higher, right, I can then look, of course, bears try once, bears try twice. I can use a trap low, a two-try trap pattern, right, to buy that kind of slingshot, right, as it goes back in the opposite direction. Now, my targets on this are going to be the other side of the range, right, and then I would definitely put the other side of that, right, of that channel. Okay, another option would be a pendulum swing, which will put you pretty much right back up to retest those highs. So you could go right high of the range, leave your final target at the high of that, right, of the move up there, right, at 59 and a quarter. The bottom line though is a move higher here, a two-try trap is what I'm looking for. Now, if we do run up on this, how could I sell this? I could sell it, but I've got to anticipate that range now. So my job is going to be now one try for the bulls, two try for the bulls. I'll basically use a nested failure to sell off of this high. I know this is a little complicated because that range, right? But the reality is with that range overhead, if this thing shoots higher here, they're going to try to buy. They're going to try to keep buying it into that range. You know the pattern I'm looking for to be a buyer. If we don't get that, if we runs up 1, 2, now we know exactly where all the buyers are caught, and now we can sell into those stop losses as the market runs lower. Now, obviously, too, if we go higher here, strong move up. If these buyers, if they hold the pullback and run on this, it's a complete reversal. It blows out the entire range. It's like, what range, right? The range is gone now. I mark up that high. I mark up that low. I now look to get aggressive off the low of that hidden channel. You don't want to get aggressive too early in that move, right? It's not reliable enough yet. You want to make sure you wait for that reversal and then hit it at the low of that hidden channel. Another option, right, would be that two-try trap. If it just starts ripping higher here, right, if it races higher, shallow pullback. Again, same pattern we've talked about here quite a bit already, right, for that two-try trap. And a lot of times what happens is these will be, again, this first pullback will be shallow. Second pullback is below the moving average, below the prior swing. A lot of times you can draw a hidden channel on here and combine that with a hidden channel. Targets, of course, at that point are back up to retest that 59 and a quarter, but really the big juicy targets up there at 26.95, right? 26.95. So now we've got a pretty good plan, I think now, right? Pretty good plan now for how I'll deal with if this market runs higher. Now, if we go sideways here, okay, sideways would be just as easy, to be honest with you, because if we can run lower and go sideways here now, if I can kind of stretch this thing out a little bit further here, right, if we end up going sideways now, we're sitting right at the lows going sideways. We're obviously bearish, we're bearish into a range. Once I have my trading range, I'm going to take the size of that range, right? That will tell me now where my resistance level is overhead. I'm going to wait for those sellers to take some profit, wait for the price to run up. that will now usually rope in a lot of the inexperienced traders. They'll try to buy that first pullback, thinking this is a bull market for some strange reason, and we can sell right into those stop losses. One of my favorite setups in a range bound market. Wait for it to try to break out, wait for the buyers in this case to buy that pullback. That tells you exactly where their stops are, and the easiest money you'll ever make is when you're getting in short and those counter trend breakout buyers are getting stopped out of their longs, because there's only one way to get out of a long position, and that is to hit the sell button, right? That's why those setups work so well. Now, like I mentioned earlier, I think one of the best possible scenarios here would be if we could get this thing to bleed lower, right? If this thing could bleed lower for us, we've got that measured move down. If it bleeds lower, it kind of diminishes the importance of that range, right? So if we bleed lower here, kind of grinding down the underbelly, right, or the bottom of this channel, right? If we bleed lower here, I'm still going to leave that channel up top here, right? So don't forget about that channel here, and that might be a great spot for us, a little trap, right, into failure, into pullback. So if we get this thing bleeding lower here, what you want to do is you want to keep your eyes on those prior swings. That will set up for basically three possible setups. One would be a trap high, two would be a buyer failure off the moving average, and three would be that seller pullback off the moving average. So three possible setups up here. One is a trap. Again, what you're trying to do is you're combining the top of that channel along with those prior swings, right? If it keeps on kind of grinding as we go. One would be a trap, right? The other would be a buyer failure. And the third would be that bear pullback. We haven't seen a lot of those bear pullbacks. There's been much room with these ranges, but hopefully we can get, again, bleeding lower here. It's obvious they want to keep running this thing lower. We wait for the pop higher, right? And we're selling into the pop as it goes higher. Now, obviously, if this thing continues to dump into tomorrow's trading session, 1, 2, 3 break down, I'm going to mark that low. Mark that high, look to sell off the top of that hidden channel. If it really gets ugly, right, like it did last night, right, and I don't expect to have another big bloodbath like that, but, who knows, right? Last night's big move was almost guaranteed a response to that travel ban. I think that caught a lot of people off guard, but the bottom line is we're probably not going to see another one of those shots here right now, but who knows, right? If it does make a run going lower, really breaks down, I have another target zone that at 2270 area, waiting below, right? Strong move down, bloodbath, right? It's never going to stop. Shallow pullback, lower low, trap high. And remember, this is called a what? A two-try trap pattern, right? Two-try trap pattern. Again, keep your eyes on those hidden channels, right? Beautiful setup. Remember, this whole thing relies on that strong move down. Right? I don't want to see people getting caught doing that right here, right? That's not what I'm looking for, right? I'm looking for a strong move down, shallow pullback, lower low, right? Trap, high, keep this party rolling right down to that 2270 area. And again, as we go over these setups right now, I'm just simply visualizing, getting my mind ready for tomorrow morning, 8 o'clock Eastern time. We're going to execute this strategy together. And don't forget, if you're not with me tomorrow, grab that free trading course. It's linked up in the upper right-hand corner. So now we've got a pretty good plan here. If we go sideways, if we go higher, if we grind lower, the tricky one's going to be as we go higher here. I think if we can get this market to run higher here, I think we got a pretty good chance here for a nice easy two-try trap going back up into that trading range. Only time will tell. Let's wrap things up right now with the yellow metal, the gold futures here tonight. Gold, I saved the best for last for you guys and gals. I know you guys are good, so I figured I'd get us warmed up tonight on the oil and the S&P. The gold is definitely, we got to kind of peel back the onion a little bit on this one, I think. There's a lot of questionable structure here, and well, you'll see here right as we go through it. What do we know about gold here, first of all? We know we're bearish. That's pretty clear, I think. Even more so, right? A great example of a strong pullback, right? Buyers try once, buyers try twice, sell into those stop losses. Great examples here, right, of nested failure patterns. Again, that failure pattern, it's a little more conservative whenever you have a really strong pullback in a bear trend. So what does a bear trend tell me? It tells me to sell. It tells me to sell at resistance again. And so I'm looking for levels of resistance. The first thing is, if we kind of peel the onion back a little bit, is a range. Now, again, like I mentioned earlier, the oil has a pretty obvious range. The S&P, not so much, and the gold is right there with the S&P. It doesn't look like much right now, but this definitely has a feel for a range here, right? And when I put on my buy zones below and I see it hit there, and I put my sell zones on above and I see it hit and hold there, that's what kind of confirms for me. It smells like a range. It looks like a range now. It's probably going to act like a range as well. So what do we do with a range bound market? We look to sell high and buy low, right? We go up, we sell high, we buy low, right? We buy underneath the range here, and we stay away from the middle. Now, anytime I have a trading range, I always like to find my hidden levels, right? Like this one right there. Great example. What do we call that? It's basically an inverted triangle, an expanding triangle. And what I'm trying to do is I want to sell off the high, right? Profit the low. Buy off the low, right? Profit the high. Simple as that. Stay out of the middle, right, of that trading range. Now, on top of that, if I can bring this guy back in now, this is where things start to get a little bit more confusing, right? You add that back in now. You can easily see here this strong move down, right? And you can easily see they kind of, it's almost like looking at a flag, right? It's almost like a flag. They use that, right, that high with that low, and you can definitely tell there's something going on here. Now, this, in my opinion, is the biggest challenge here for us right here on the gold, because you got this rising support trend line. And rising support trend lines, you know, I call them bear repellent or bear spray. You know what I mean? You know, when you go camping, right? You bring that can of spray, right, to keep the bears away. Yeah, that rising support trend line does a good job of keeping the bears away. Because as this thing goes higher now, they're going to be like, oh boy, I've got this rising support here. I don't want to sell into it. I can't get a direct line down to retest those lows. So that's the big concern, I think, is that flag. Right? Now, when it comes to a flag pattern, real quickly, just kind of keep it simple here. When it comes to a flag pattern, the key to trading flags is to make sure you look for the short up above the highs, right? And you want to get it deep above the high. The key to a flag is you've got that rising support trend line coming in, right? So you really got to be careful. You want to get above that high. Now, when you get above that high, momentum is going to come into play. And so you really got to be careful with timing your entry on this to get short off of that high. The other option, right? The other option is to get underneath it. And when you get underneath it, what's going to happen is there'll be a lot of buyers trying to buy with traps down here. I always want to see a little trap low and then try to hold it and sell it off the underbelly. Okay, so pay attention here real quick. These are two big important pieces. One piece is we want to be at the extremes, right? Like it's got to be way up around the high of that channel because you've got that rising support trend line. Okay, that one's relatively easy. Just make sure you're really close to those highs, right? Stay away from to basically stay away from trouble. On the other side of it, though, as we try to go lower, this is a bull channel, and what's going to happen is buyers will be waiting below that low. So a lot of people always say, well, don't you just trade the breakouts? You don't trade the breakouts of these because you're going to have buyers coming in. And a lot of times those buyers, they're going to make you pay, right? You'll sell it down here. You'll sell it below the range, below the channel, right? It'll make you pay. It'll run right back up into that trading range. The ideal scenario is to wait for those buyers to get in. That now tells you right where their pain is, right? That tells you right where those buyers' pain is, and we're literally selling right into their pain point, right? I'm always telling my clients, think about the opposite side of the market, think about where they would have got in, and think about if you were in their shoes, where would their stop be, right? My stop would be right below that low, right? If I bought that pullback, right, that little trap low, right below it, if it exceeded that area, I'd be out, right? I'd be out whether I like it or not. That's where you want to be selling, right where those counter trend buyers, right, are getting out. So we look back at the flag now, and now you can see here, it really fits pretty well because now if I can get up around the high of this flag now, that will be a very strong momentum move. So what's the best way to sell it as we go higher here? The best way to sell it's going to be a nested failure, just like we saw here. Strong move up, one try, two try, sell it back down. Right? The key is you got to get up around those highs here. Okay, so if I get this thing up, 1 and 2, and back down from there, making sure I'm selling, right, with a good amount of distance before I run into that rising support level. Now, that may also, right, as we go higher here, anytime you see a big move up like that, they may also hold that pullback. And if they do, what is that? That's a 1, 2, 3 reversal. Mark up that high, mark up that low. I'm not drawing it off of the medium-term low, the big low down here. Find that, right? Find that big low and buy the low of that channel. Now, where's my target? My target is back up to retest those highs. Now, of course, right, sometimes the market runs, right? Sometimes we get these big, right, block runs higher here, right? A strong move up, shallow pullback, higher high, trap low. We call that a 2-try trap pattern, right? We've talked about that many times before. Strong move up. Again, look for that higher high. We didn't get a higher high here, right? Make sure you get that higher high. The higher high will confirm you now have the green light to buy that trap low. There's a big difference between a nested failure with lower highs, right, and a 2-try trap with those shallow pullbacks, right, and higher highs. And again, we're going to do all this together tomorrow. So I know I'm covering a lot right now, but not to worry. We're going to do it all again tomorrow. We'll review it again tomorrow morning once we have some more information, right, to work with. So now we know what the market wants to do if it goes higher here. The next thing is if it goes sideways. Honestly, if it goes sideways, everything else becomes easy, because now that flag breaks down. So there's a good chance here this thing may not be a flag, right? If we go sideways here, right, we go sideways here for a while. Now there's no flag. Now it's just a range. And now what I'll do is now I can use that, right? Now that expanding triangle becomes a very big part of this. So hopefully this market falls asleep on us for a couple hours and goes sideways here, right? If it runs higher, though, you've really got to be careful with those nesteds before you sell back down, or, right, possibly that 1, 2, 3 reversal, and we're buying off of that low. If we go sideways here, that really negates this thing as a flag. It confirms the range. What do we do in a range? Bear range, we sell high with buyer failures, right? Again, we're looking for that, right, that trend line as we go overhead, trying to incorporate that trend line up inside my sell zone. Can I buy underneath a range? I absolutely can. What's my best pattern if it's a range now? If we go sideways here, what's the best way to buy in a bear market? I won't need a reversal because the range will be enough of a magnet. Just a nested failure, right? That'll be perfectly fine as we go below that range. Again, the caveat here, though, is we have a range for a couple hours there. Then we make that shot going lower, right? The bears try to sell the pullback once. They sell twice, right? That range will be a magnet as we go. And again, I'm looking for that trend line, right? Some level of support to combine with this. Now, what if we go lower here, right? If we just roll lower here now, that's a different story, right? Now, to be a buyer, I need a crown reversal, right? I need a 1, a 2, and a trap off of that low. See the difference there, right? There's a big difference there. It's very small, right? If we go sideways in a range, that range is what? It's a magnet, right? So we go down, I can trust, right? I can trust a 1, 2, and buy back up, right? But if the market just sinks here now I'm going completely against the trend, right? Now, where's my objective as we go lower? My next objective is down. It's a measured move down there at 1519, call it 1520, if you will, right? That's what the next level is going to be here, right, for those gold bears. So if we go lower here, a 1, 2, 3 breakdown, that's the easy one. Mark the lows. I would definitely mark that big high, right? That big high up top, and find that, right? Find that sell off the high of there. Or maybe we simply rifle lower, shallow pullback, lower low. You know what I'm talking about, right? Yes, trap high. We call that what? A 2-try trap pattern. Again, look for those much tighter channels, right? You're selling off those channels. Target is that measured move, then a 15-20 area, right? So now we get a pretty good plan for as the market goes lower. If we sit in the middle, we sit on hands. As we go higher here right now, that's a higher low. There will definitely be a rising support here. So you want to let 1, you want to let 2, right, and sell it. And even better, right, if I could get a crown reversal up here with a trap high, as long as we're not selling too low, I shouldn't need that trap high, right? As long as I've got a good distance from, right, my entry to my rising support trend line here, as long as the risk reward ratio makes sense on that, what you want to avoid here is, with that trend line coming over, is you want to avoid this of a pattern, right? That type of sell. That's one where you don't want to trade those, right? Those are going right into that rising support. What'll happen in these situations, we talked about this last night on the S&P, if we do go up and pull back, it'll be a trap, right? It'll be a trap high because nobody will want to sell into that rising support. So you can definitely try to thread that. It's a very advanced setup, though. You really got to have a good command over location of that trend line, location of the range. That's a very professional grade setup, if you will, right? What I'd rather have is get this thing to really pop, right? Get the thing to really pop up here. Get that momentum for the bulls. Make them think this thing now is reversing once, twice, and then sell back down. That's not going to require as much finesse, right? Not as much threading of the needle to sell off of that high. And again, if this thing keeps taking a bath over here, right? 1, 2, 3 breakout, sell the top of that hidden channel or that 2-try trap pattern to keep this party rolling to the downside. Remember, tomorrow is a Friday morning. Friday mornings tell me early in, early out, right? Remember, 10:30 tomorrow. Take the temperature of the market. And don't forget to come out and do it with me tomorrow, right? We're prepping up the charts. We're getting our mindset ready, getting our technicals ready for tomorrow. Tomorrow morning, right? We're not going to get drunk on the headlines. As I keep talking about this stuff here this week, we're going to stay razor focused, stay disciplined, stay patient, right? And do our job for those 2.5, 3 hours tomorrow morning. Finish it up and then hit the weekend. Don't forget, next week, no newsletter next week. I will be available for clients during quadruple witching, so not to worry for all the clients out there. And don't forget, I'll put all the registration information, right, for membership as well as our free trading classes. I'll put all the links in the description of this YouTube video. Don't forget to call me if you have any questions tonight, tomorrow, this weekend. I'm always available on that toll-free phone number. Don't be afraid to use that live support tool on the right-hand side, right, if telephone isn't a good fit for you. No matter what, though, no matter where you are out there, please stay safe. If I don't see you guys tomorrow morning in the trade room, I'm thinking about you all. I hope you all stay safe, stay healthy, right? Use caution, wash your hands, as they say, right? Be aware of your surroundings. And I'm definitely pulling for humanity this weekend. I will see you tomorrow morning at the opening bell at 8 o'clock. There's no newsletter scheduled for next week. Next week is quadruple witching. Be careful of rollover for tomorrow. Not careful, but be aware of rollover for tomorrow. And I know there's a lot to cover here tonight, so come out and join me tomorrow morning, and I'll make sure you know exactly where the best stuff's going to be every single second of the session. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? Right? Stay safe, right? And stay strong and stay focused. Stay focused out there. We'll see you guys tomorrow morning. If not, we'll see you guys after quadruple witching with our next edition of our nightly newsletter. As always, guys, be well out there. Be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.